Hi, good morning, good evening, good afternoon, wherever listening. Let's today talk about resistance and resistance box zone trading. So, in resistance and resistance box zoning trading, this is very important because most traders do not know when to get into the trading and when not to. Entry points will be very difficult for many people. So, for this, I think let's talk about how you can use the resistance. So, before going, the disclaimer is make sure you consult your financial consultant or personal financial planner before you take any decision. So do not consider the examples or the charts which we example here as a buy or sell recommendations. So what is resistance in trading? Resistance is also used in electricity and other subjects, but let's talk in English. Resistance, let's talk about trading. Resistance refers to price level where an asset struggles to rise above its price. It acts as a ceiling where selling pressure overcomes buying demand. Traders watch resistance levels to predict potential price reversals or breakouts. If you have seen, support and resistance levels are very important things. If you know the resistance, that is the zone you should book profit, or this is the zone you should short a stock. So let's go to the next one. Here you can see the example where Kotak Mahindra is one of the stock leading banks in India. The stock has rallied, 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 but if you see in the bottom, this acted as a resistance once, twice, thrice, fourth time, fifth time, sixth time, seventh time, eighth time. Every time the stock is falling from the top, also this acts as a support. If you see from the top, the resistance from the bottom, it becomes a resistance. From the top, it becomes a support. So it is important you understand when you're trying to invest trade in anything on a day time frame, 1 day time frame, you can clearly say this one. And the other thing you can clearly see is the stock is in the range almost for a couple of years. So we will talk about the ranges and later on how breakout talks, all those things. What is a resistance box? We will talk about the resistance box in the next coming slides, but in the slide earlier you have seen the earlier you have seen the lines here, but in the next thing you will talk about the boxes where you see the boxes here. If you see the boxes, why does the boxes? What is the difference between box and line? Line actually tells exact price, but the box give you a range because some traders do not like to go with the exact price because market always do not respect the exact price. It may come to that zone and may fly. So just to make sure that you are not missing that zone, people try to and keep the orders in the zone rather than exact price. The entry price of the zone itself, they will keep, so it will come and it will go. So these are the support prices. I can help you. You can keeping these indicators on your platforms. You can connect with me in the bottom. You can schedule an appointment with me, and we can also do a portfolio review if you want. So resistance and resistance box in trading, important thing. I think we talked about the resistance lines and resistance boxes, identifying resistance levels by looking at past price data where the asset has previously stalled. So based on the previous price movement, the lines are drawn, and the plots also boxes are also are market zones or zones where you can um, draw the lines. And you can sell near the resistance and watch the breakouts, it's happening or not, and you can use the stop losses if you're really going short in this market goes on your way, it's all good. If market goes an opposite way, then I think we can talk about the stop losses. Like, it is simple. If I have to say, uh, if you're entering at a trade at a breakout zone, and breakout zone trades are very risky, if I have to say stop losses, because the stop losses will be huge, considering if the stop loss is normal, whatever on a buying side, earlier candles low should be the stop loss, and a selling side, candle high, or the current candle, earlier candle high can be considered as thing. And we can move forward. Let's move forward. I think features of resistance and resistance box, visual markers, resistance and resistance boxes can be visually marked. I think I have shown it earlier. Historical, based on the flexibility is always there in drawing rather than a single point in the boxes. Boxes, you have flexibility. That's where you can do averaging if you really want to do averaging kind of thing. Historical significance is these level zones are derived from previous price movements and market reactions. Dynamic use, as the market evolves, resistance zones can shift and make them adaptable. How? There's another examples of Tata Motors where for a long time the stock was moving in the range, and this range they tried to move, and but this line acted as a resistance zone. Boom, You have seen how much correction has happened. I think then the breakout has happened and it moved up. So the same thing applies to the majority of the stocks. So watch out. Features of resistance and resistance box, visual markers, resistance and resistance boxes can be visually marked in the charts. Flexibility. We can talk about more examples in the courses. So let's see about how to use resistance and resistance box in John. Identify the resistance levels, plot the resistance boxes, sell near resistance. I think we discussed this. Um, There's the for the Tata Motors boxes, support on resistance box zones. You can clearly say for Reliance, this is if you see clearly this is active support, but this active resistance two times it has active resistance 3079. The same thing you can see it is actually it is just in the zone. It never went above the zone after it's falling. Benefits, clear decision making, risk management is good, improved accuracy is there, predictive value. You can actually help to forecast. This is the place where I have to sell my stock based on the historical movement. Advantages, very simple to understand. Fifth grader can understand, even fourth grader can understand it. Just sell it where the upper line is comes. Useful in different markets, stocks, forex, commodities, cryptocurrency. Adaptable strategies, boxes are very adaptable and flexible. Disadvantages, not foolproof, no, nothing. There is no holy grail in the market. So subjectivity, everyone have their own subjectivity. I can trade it, someone can trade it intraday, I can trade it weekly range. So nobody has exact. So subjectivity does matter, trend ranges does matter. So be careful while you make sure what are your stop losses, what is your patience level, and what is your time level, and what is your mindset. Very, very important. Mindset determines majority of the things. Market dynamics changes. So do not think 10 years back resistance might still hold good. No, that's not true. Limitations of resistance and resistance boxes, false breakouts are not good, or lanes not suitable for all strategies because some strategies are momentum strategies that may not be good. Taking key takeaway of resistance and resistance boxes. Resistance levels act as psychological barriers. As I said, like it's all supply and demand comes in kick on and how much time it all takes. And as I said earlier, I think about this car driver analogy. If a driver is driving for 5 hours continuously, sixth hour, he might face um, you know little less energy when compared to the first hour of the driving. So the same thing applies to the stock. So the resistance boxes offer a flexible trading zone. These tools help traders to manage risk, time entries, exist potential, improve profitability. Useful, very useful if you are in a um, very new trader. You don't understand much about this all these things. You could just apply this thing. It is very, very useful. So let's go to the next slide. And thank you. Thanks for your time. Stop the presentation and let me stop.